Welcome to the Flow Tracy Money Audio Commentary. This is Owen Tracy recording, and it is 3:37 p.m. and that is Central Time. And today is July 3rd. Wall Street closed a bit early today ahead of the July 4th holiday, and I thought it was rather interesting that today was the day that the New York Times chose to come out against Joe Biden's candidacy. And I think that there is a strong likelihood that by the time we get to the end of Sunday, Kamala Harris will be the assigned candidate for the Democratic Party. And then that isn't something that really moved markets. Instead, we had a lot of economic activity, and several of the economic statistics came out and supported the bond market. So we've had unemployment we'll have the official unemployment figure on Friday, but then employment changes were lower than expected, but then the ISM services went from expansion to contraction. And that was equally true for the ISM services employment number and the new orders as well. So certainly I think we've seen evidence this week of slowing economic activity, and then jobless claims were also higher than expected. And of course, we had Jay Powell speaking yesterday, and he was talking about the need to wait and see, and looking at the strong stock market, looking at very strong housing prices, and still a high number of people that are employed. Then the Fed seems that they don't want to preempt a weakness in the market. They're going to let the market tell them what to do. And this, I think, is perhaps the most important point, that the Federal Reserve is no longer in the business of forecasting. So they might bring out forecasts, they might have hundreds of PhD economists making forecasts, but they don't base their decisions on forecasts. Instead, they're not going to make the mistake to loosen too early, because they don't want to have an inflationary problem that lasts interminably. So they're going to wait until economic activity slows down to such an extent that they have to cut. Then they will. And of course, generally, because the economic data is lagging anyway, it means that they usually have to cut more than they think they do. And that is basically been the cycle for decades, and nothing has changed. I think perhaps if anything has changed, it's that the Federal Reserve is now more chastened than they were in the past, because they missed the jump in inflation. So all of that is against a background where Bitcoin prices have been rather weak. Gold prices today were firm. Oil was pretty steady. Copper rebounded. And I think we have plenty of charts to look at in here.